What up, guys? How you doing? Welcome back to Newbie Money. If you guys are new to this channel, I'm just a new day trader who's trying to document my whole process to one day becoming a profitable day trader. And right now it's a bit of a struggle. Okay, it's a lot of a struggle, but that's fine. That's just how it goes. You know, no one's gonna make it right away. But I've come to a crossroad where I have to really define what I'm doing with day trading. And that's kind of what I did in this video. I've spent the last 5 days just really going over and just turning every single stone and just trying to understand how I'm going to do it, what my strategies are, and all those kind of stuff that I really need to address. So without any further ado, let's go straight to this video. Alright, so this video is going to be pretty much the foundation where I'm going to stand. And I'm really excited to share this, and also I'm really excited to implement it, to be honest. But I really needed a good foundation, and this is what it is. So let's go straight with it. So I want to introduce a concept that I've created, and this concept is called a day trading triangle. I stole this concept from firefighting, which is my day job. I'm a wildland firefighter, and within the fire communities or fire theory, whatever you want to call it, there is something called the fire triangle. And pretty much what it states is, for fire to exist, you need 3 components, which is heat, oxygen, and fuel. And if you remove any of these components, fire ceases to exist. So as a firefighter, you're always kind of thinking, how can I eliminate fire? So we have 3 different tools to do that. Oxygen is obviously the hardest one, but you can remove fuel, you can reduce heat, you can do a lot of different things to combat fire. So the day trading triangle is pretty much the same thing, but I guess in a reverse, because I truly believe that for someone to be a successful day trader, you need 3 components. And if you remove any of these components, you're not going to be a successful day trader. And these components are market edge, risk management, and health. These are just the 3 pillars that really hold everything. And I'm going to be breaking down each of these and how I'm going to be using them to implement into my day-to-day trading. So let's go straight to the first one, which is market edge. So within market edge, I've created 3 categories here. So the first one is strategies. This is just all my different strategies, setups, and what they are, how they work, what I'm looking for on the daily candle, 1-minute candle, all that good stuff. The second one is data collection. This one's a little bit tricky because it's easy to collect a bunch of data from the market, but it's really hard to break it down and kind of digest it in a way that's going to benefit you. So I'm still working on this one, and I'm going to show you guys a beta sample that I have with data collection. Third is a drawdown period tracker. So the main reason why I have this one is I really want to know how many days it takes me to come out of a drawdown period, how many drawdown period I had in 1 month, how many drawdown period I had in a few months, and what caused it. Was it just me being emotional, something, a bad trade happened, or some just weird anomaly that happened, and how long is it taking me to kind of come out of it? And I truly believe that this is going to be a really good complement to my strategy and my data collection to just really overall help my day trading. So let's go straight to the strategy one and just break down every single strategy that I have under my arsenal. So the first strategy is called the overextend short. Pretty much I'm looking for a stock that's overextended on the daily chart. And if you can look here, the stock has gone up quite a bit in a few days. So this is exactly what I'm looking for, and also complemented with the volume going up as well. And now I'm going to be looking for a short entry on the next day or the 2 days coming. And the main reason why my conviction is that it's going to go down, besides the fact that it's overextended, is people who have entered around these prices are going to be looking into cashing for their profit. But also there's going to be another people like me who are trying to short the stock, just waiting for the first sign of weakness to come in and short the stock. So with those 2 factors coming in, this is one of my most profitable strategy that I have. The same strategy can happen on bigger name stocks like AMD, and they still do the same thing, the same play out. The only difference is that when you are on a smaller cap, even around 500 million to $2 billion cap, you're going to get a lot more percentage change compared to these bigger large caps, and you're not going to get the same amount, but you can also put more money into this large cap because there's a lot more liquidity and it's not going to move that much on you, so you can compensate that by dumping more money into these kind of stocks. So it still works. Like, it doesn't matter if it's a mid cap, small cap, large cap, the same pattern is present in all of these. The next play is called the overextend long. So pretty much it's the same thing but reverse. Like, I'm looking for a stock that has showed weakness over several days on the daily chart, and I'm looking for a quick bounce play on it. And this is heavily fueled by people trying to buy in, swing traders looking at this for good potential, but mainly a lot of the big institutions, financial institutions that short these stocks are trying to also cover and get their profits. So this is another good factors that drives it to go for a good bounce, especially if it has a good support level. But it's pretty much exactly the same thing as the overextended short, but just reverse. I'm looking for a stock that is extremely beat down, then I'm looking for a quick, like a dead cat bounce, and me buying the bottom, buy the dip, and sell the rip. Same thing could happen on even a larger cap stock, like we talked about with the overextend short play. If you look at Alibaba, beat down. It just had several days where it just keep going down, keep going down, keep going down. And now I'm looking for the same thing. People trying to buy the bottom and have it a quick bounce. I'm not looking for it to go back exactly where it came from, but I'm looking for just a quick bounce on the daily. So it could be a 1-day bounce, it could be a 2-day bounce, but the statistical chance is a lot more in my favor when it comes to this. So this is another really good play. So just like overextend long, overextend short, there's something I have called micro overextend long and micro overextend short. So that's just pretty much scalping. If I say micro, I mean I'm scalping. So what I do when it comes to scalping is I like to use range within the stock market. So let's just say the range over here, this resistance and this support. So when the stock comes up here, it's an overextended short here because on the daily, so on the 1 minute, it has 4 green candles going up. I'll be using this as a resistance to short it, and it comes down here. Then you can do the same thing here. You can also buy the dip here once it's been oversold on the 1 minute. So exactly the same thing as the overextend long and short, but you're just looking at a much smaller time frame and you're scalping it. And that's why I call it the micro overextend long and the micro overextend short. Here, I'll show you guys another setup here. So just all in a 1 minute scale here. You can see here and notice that there's a 3 top resistance here, so you can short here, and this would be your exit, the top of this line, so top of this resistance. And the main reason why it's such a very tight range is because when it comes to scalping, you want it to work pretty much right away, and if it doesn't work right away, you want to get out with the small loss you have. You're not really sitting there waiting and hoping kind of thing. It's just like quick attack. If it works well, it's good. If not, you just get out and retreat. So that's a really good play. Ideally, this would be the best play because there's 3 failed resistance here, 1 in pre-market, 2 right when it opened up, and when you see this one has failed to go up this one, then this would be the one that gives you more conviction to even go in with a little bigger size on it. So really good play. A lot of my plays are scalping, so this is going to be my bread and butter. Another play that I have is called the cup and handle. So the cup and handle play pretty much complements my scalping. That's what I use it for. So when you look at this chart, you see that it has pulled back from this resistance, but over here it's got that hammer head on the top and the hammer handle on the bottom. So it means that people came, try to bring it down, but people brought it up again, and it has this kind of more upward momentum now. So the next day has a higher likelihood that it's going to be a green day, possibly test this resistance. So the reason why I say this is going to be something that complements my scalping is because now when I'm scalping this stock, I'm going to be scalping on the long side as opposed to shorting it, because the trend is showing me that it's favoring it to go on the long side. So I don't want to be shorting on the wrong side. So right here is clearly looking like it's going to be a long. So I'm going to be scalping it on the long side. Let's check out another one here. So here's another one here. Same thing is happening. You got that hammerhead on top here, that long wick with the handle on the bottom, and it looks like, you know, got bought up and came up here. And same thing. So I'll be looking if I'm scalping on the long side, and it gives me more conviction. And this is a really good complement to scalping because I feel a lot more comfortable when I scalp if I know that the daily is on my side as well. So just like the cup and handle strategy, there's something called the reverse cup and handle, which is exactly the same thing but reversed. And I'm looking for the same setup but the opposite. So the hammerhead is on the bottom side and the hammer handle is on the top side. So it means that people wanted to go, they tried to bring it up, but they got shut down here and they brought it down. So the next day is most likely going to be a red day. So if I'm going to be scalping it, I'm going to be mainly interested on the short side of it. Okay, I'll show you guys another one like that. So this is Tesla. Tesla is a whole different animal. It's just a crazy beast with 1 trillion market evaluation, but the same thing happens here. It looks like it's not going to break this resistance and it's got to be down near the end of the day. So when I scalp this the next day, I'm going to be mostly looking at the short side. If you look here, there's a very good example here. So imagine that you haven't seen these candles yet. So, and you only see this and anything on the left side of it. So when I see this, I'm going to be like, okay, you know what, maybe tomorrow most likely is going to be a short day because it looks like it just got, you know, sold here, and the next day it didn't even come up to reach any of these resistance. So most likely it's going to be pretty weak. So, and it looked like it was a really good red day. So on that scalping, that would have been a very phenomenal day. So there's so many ways to play this and it's really good, but that pretty much sums up all the strategies that I have. So the first strategy is that overextend long, overextend short, micro overextend long, and micro overextend short, and cup and handle and reverse cup and handle. So we got lots and lots of strategies, 6 I suppose, but and you don't want to like too much strategies, but that is my bread and butter strategies that I'm going to be using, and I'm going to be trying to zero in and just redefine them and trying to just, you know, smooth all the rough edges and trying to make it a way better system for myself. Alright, so let's go straight to the next part of this category, which is data collection. Alright, so we got data collection, and like I said on this one, it's really easy to collect data, but it's really hard to break it down and trying to, you know, digest it and find a good system to complement your strategy. But I'll show you guys the beta version that I have, and we'll see how that looks like. Alright, so this is one of my data collection for the overextend short play that I have. So that's one of the strategies that I showed you guys. So what I like to do on this one is, first I collect the low price I had 10 days ago. And I got the low price I had 6 days ago, 4 days ago, 2 days ago, and 1 day ago. And I'm going to explain this a lot more as I go through on. So the main reason is it just shows me that right now, September 15 is when I collected this data, and this is using this reference. It was $32.13 when it closed. So 10 days ago from that, it went up 142%. On the 6th day, it went up 136%. 4th day, it went up 81%. 2nd day, it went up 64%. So 2nd day meaning just right before this one here. And the reason why is because I want to see the chart slowly building up higher and higher and higher on the candlestick, because that's going to show me that overextend that I'm really looking for my strategy. So let's just say, for example, on the 10th day, it went up 142%, 6 days up 133%, and on the 4th day, it's only up 2%, and on the 2nd day, it's only up 0.5%. So at this point, it means that the chart was getting overextended, but near the end, it just kind of fizzled and it really didn't go up higher or go down any lower. So at this point, that means my strategy is no longer there, because one of the biggest factors of my strategy on this one is that people are going to be wanting to cash in some of their profit. So most likely those people cashing in their profit did it on that second or fourth day, because it only went up 2%. So it maybe had this battle between the buyer and the seller, and those people were able to get out there for their profit. So the next day, I really don't know if it's going to have that downward pressure. So that's one of the main reasons why I collect it like that, because I want to see that progression of the candlesticks going higher and higher and higher to confirm that it is just overextending over a 10 days period. The second thing is I collect what price it opened up the day that I plan to short it. So this guy opened up $43.93. So keep in mind I said that it closed at $32.13. So Buddy opened up 32% higher the next day. So, and the reason why for this is because a lot of us could be like, okay, like this stock is so overextended, you know, like I'm gonna short it right now. But this, you know, and like the stock still had a lot more room to go the next day, up to 32%. So if you shorted it on the day with $32 and you wake up with 32% down, that's quite a bit, you know, so that's a pretty painful lesson. So I like to see how much they move and what they do and where I can kind of enter it properly. So the second thing I also collect is how high it went. So it opened up at $43.93 and it went all the way to $47.50. Then the third thing I collect is how low it went. The main reason why I do that is I calculate how many percent it went down from the high to the low to show me how many percent how many shortable percentage I can get. So that means it went down 26% from this high to this low. So 26% is the bulk of the meat that I have the right to eat, kind of thing. This is the kind of where the margin I have to play. So I can have a very conservative play and say, you know what, I plan to make 5% out of this. And if 26% is the bulk of the shortable percentage I get, 5% is pretty conservative and pretty achievable, you know. So that's a really good way of kind of breaking it down. Now I'm going to show you guys this one right here. So the same thing set up here. I collect how much it went up on the 10th, 6 days. But if you looked here, this stock closed at $20.97, but it opened at $16.23. So it actually opened up 16%, 17% lower than the previous closing, and it went to $17.94 high, and it went all the way down to $12.63. So the crazy part is there was a 29% of a shortable percentage like room to work with, which is better than this one. So this one did have more opportunities for me to short it and get that 5% that I want. But now when I said it's easy to collect data, but it's hard to metabolize it and work with it, and this is where it comes. Now, these stocks are different market caps. I think they're around 500 million, maybe $1 billion market cap difference. So, and what the float size is, what the news and stuff like that could have made the difference of why this stock went up 32% the next day, then faded, and compared to this stock that it went minus 16% when it opened. So I need to have a system as I progress with my day trading to collect those different data and be like, this stock is more likely to gap up the next day, or this stock is more likely to gap down the next day. And that's something that's going to take time, and I'm going to work with it and come up with a very good system over time. So that's pretty much it. That's the data collection stuff. It's not perfect, honest work, but one day, guys, we'll nail it. All right, so let's go on to the next part of the market edge. So the next part of the market edge is the drawdown tracker. Like I was saying, the whole point of this is just to see how much I went down and how long it took me to come back up from the drawdown period, and kind of what caused it and stuff like that. And this is, I think, a very, very good complementing tool to my whole strategy and data collection. So let's just go check it out. So this is how the drawdown tracker looks for now, and it's different components that I want to talk about. So this is I want to do the number of the drawdown. I want the date, the percentage it went down, and also how many days it took me to recover it. And before I start that, I am going to consider a drawdown when you've gone down 5% within your account. If you guys are completely new and you're like, what's a drawdown? That's a fair question. A drawdown pretty much is, let's just say you deposited $3,000 to your account and you traded for 3 days. And each of those days you made $100. So now your account's at $3,300. On your fourth day, you lose $50 and your account goes down to $3,250. A drawdown is the difference between the highest of your initial profit you made and what your current account value is right now, and minus the initial deposit. So that's a $50 drop down, and you can get a percentage of that, but initially that is what a drawdown period is. And you want to be going up in that really good trajectory so you keep going and you keep making money. You don't want to have these really volatile drawdowns all the time. So I'm going to show you how I would track this. So let's just say I had a 6% drawdown on January 7th, okay? So first I'm going to do is do drawdown number 1, and now I'll explain that to you guys a little more. And I'll say January 7th, and I had a 6% drawdown. Okay, perfect. Now I am going to do 2 things with this. A is if I somehow recover from this drawdown within, let's just say 4 days, then I'm going to say, boom, 4 days, that's what it took me, and this whole drawdown period is over. Okay, now let's just say I didn't recover from this drawdown this whole month. The only time I'm going to update this is when I go to a new month. I'm going to say drawdown number 1 because I'm still in the same drawdown. I'm going to put February 1st, and I'll just say my drawdown has gone to 12%. Okay, then let's just say 2 days after this I make it back, and let's just say it took us 17 days, whatever. Then it took us 17 days to come out of this drawdown period. Pretty much that's how it works. So let's just say we got another drawdown period in February. Let's just say 11. Then it was a 4% drawdown. Then we managed to get out of it within 3 days. And that's pretty much what it is. Don't mind the gap here. Should be together, but again, the whole point of this is I want to see how long it takes me to come up from a drawdown period. And later on in a subcategory journal, I'm going to write down what is causing it, or what caused it. Was it just a bad trade, or was it emotionally caused, or just like a freak anomaly that happened within the market and that caused it for me to have a drawdown period. So I think this is going to be a very, very good complementary tool to my overall market edge. Alright guys, let's go check out the next part, which is the next part of the day trading triangle. So the next part of the day trading triangle is risk management. This is by far this is the most important part, 100%. And I've put in a lot of work into this because, again, like I said, this is what's really going to catapult me into the right direction. So within risk management, there are different categories. There are 3 categories that I'm really going to focus on. First one is called the constitutions. Constitutions are all the day trading rules that I have, what triggers them, how they happen, when they happen, and all the different ones. Just really, really laying it out there. Second is journals. How am I going to journalize my stuff? How is it going to be structured? What is going to be journaled? And third is my trade analysis. How my trade analysis are going to be, my trade recaps, weekly, monthly recaps, all of those kind of things. All right, let's go straight to the constitution here. So within the constitution, there are 5 subcategories. First one is called the cardinals. These are like the main rules that I have, and it's pretty much the building foundation that's webs out to the other rules, but this is just kind of the concrete pillars of the main rules that I have. Second is called the pre-trade. Any kind of rules that I need to do before I make a trade, post-trade, entries, and positions. And I'm going to be really breaking into each of them and breaking down what the rules are for each. So let's go straight to the cardinal. Main rule within the cardinal is max loss must not be exceeded. My max loss varies from 1 to 3%, very rarely 5% if it's a really good setup and I need to give myself a little bit of leeway, but I'm not even going to talk about that right now because I haven't entertained a 5% max loss in a while, and I need to stick with that 1 to 3%. Second is complete daily diary, like daily journal. All of those. It's such a huge part. I know when I don't do well with day trading is when I slip for my journaling. Third is no swing trades over 25% of your portfolio unless the position has a 3% prior gain. So this means, let's just say day trading, scalping, and I'm getting a position and I notice that it's doing really well and I hang on to it, and near the end of the day I was like, wow, this is actually doing really good. Then I sell half of my buying power, also because my broker will take half of my buying power because they don't extend that to overnight. Then I can be like, you know what, I have 3% or more cushion gain that I've had because I've been writing this, and also on the daily it looks like I'm facing the right momentum with this trend of this chart, so I'm just gonna swing this. So I can swing up to 100% of my portfolio when I do that. The next one is commission is 20% of your profit or $50 per day. Commission is something that I'm struggling hard. I continue to struggle with, and I will get better at it, and but I'm conscious with it and I'm still working at it. So ideally I want commission to be 20% of my profit, or if I'm really sizing down and I'm only making $1,500, then I don't want it to be more than $50 on those days, ideally, because that's still quite a bit. But like, I'm really trying to minimize the commission. That's the whole point of this. The next one is the trades on Monday will be 75% of my buying power. A lot of this is because I noticed that when I trade on Monday, I'm a little bit not angsty, but Monday tends to be volatile. Also, if I have a very bad day on Monday, it tends to really project on the rest of the week for me. So it's just kind of being proactive that if I don't give myself that much ammo, I probably won't do that much harm. So that's kind of the thought that I have behind it. The next one is, if you detect a software issue, just reduce your size to 50%, because, for example, my broker trades zero. I do love him and I like him, but they got lots of problems, and they're not the only one. There's a lot of other brokers that have a lot of problems, but it just prevents you from having this very unfortunate event where you get trapped into a trade and you can't do anything about it because you can't get a hold of the brokers because every single person is messaging them, and you just kind of protect yourself and be like, okay, you know what, I detected a few glitchy stuff. I'm just going to reduce my size or not even trade. So that's going to be really, really big. The next one is no mobile trading. You can't do any mobile trading because I don't have the same setup to see the charts in level 2, but I can use mobile trading if I am closing a position. Second one is no trades executed on a stock below 100 million market cap. This is a given. It's just the stocks are too small, way too volatile, most likely will lack liquidity, so you don't want to get stuck in that kind of stock. Third is 3 consecutive of max red days will result in me reducing my buying power to 50%. So if I have 3 consecutive max red days, I'm going to be like, you know what, obviously something's going on, so I'm going to reduce that. So that's the cardinal rules. Let's go straight to the pre-trade. This is a really, really big and rules and routine that I do in the morning now. So I gotta wake up 1 hour for the market. That means I'm gonna be fresh, alert, and ready to go. It's not gonna be like me just getting up slowly and trying to find the computer. I still got that glaze from the light. This means I'm gonna be really, really focused. I'm ready to perform, because it's the same thing like any other job. You need to wake up and be ready to perform, and this is what's gonna help me. Watch list must be completed prior day. So that means I spent the time to look at the different stocks and come up with the best strategy to be like, this is going to be my my guy or my girl that I'm going to trust, my go-to stock that I'm going to go for, and these ones I'm going to keep on the side to watch. Then pre-market checklist is really important. You get to see all these gap up moves, and also your watch list can completely change the next day because you might have a really good setup on this one stock, but some weird catalyst comes up the next day and now it's not the same setup before, or another stock that was not on your radar but you had it on the watch list kind of thing, but it was one of your main stocks. Then some random news came up, now it's on your main radar. So it's just really good to have that pre-market checklist. Next thing is meditate. This is something that I'm really trying. I'm still new at it, but I'm really trying to do that 5 minutes of meditation before I trade a stock, because it really calms you down, but also it puts you in the right headspace before you trade. Second, or like the next one, I guess, is water, coffee, food, whatever you need. Just, make sure that it gets you ready kind of thing. It's part of the preparedness aspect of it. And last, my camera just died, so we had to switch to a different webcam, but just to kind of start where we left off. And so the last part, I believe, was nature calls. And so nature calls is pretty much just make sure you do your any duties, your nature stuff. So if you gotta go to the bathroom and stuff like that before the market opens, make sure you do all of that. I couldn't tell you the amount of times where I just drinking my coffee right before the market opens, and as soon as the market opens, I just gotta go to the bathroom. And there's so many good setups coming, but I can't take part in any of them because I didn't just do a simple task, which is just listen to my body. So huge part of that, and it really just helps you out to be set up perfectly for you to succeed. All right, so let's go check out the next part. So post trades. So pretty much what this is completing your daily journal at the end of the day. I'm really gonna dive into the whole journaling part and how I do it, but it just keeps me accountable that at the end of the day I will be doing my daily journal and staying true to it and kind of analyzing it. Second thing is a visual trade review. This is just me just looking at the charts, where I traded, where I bought and sold, and it just really complements your daily journal because now you have something to kind of tie into when you write it down and everything, because you have a really good understanding of where you bought. And maybe you might have missed something because there's times where I buy something and when I look at it and I do a visual trade review, I'm just like, I shouldn't have bought that because the volume was very weak or something like that. But it's really useful. All right, next part is entries. So the main rules when it comes to entries is you need a statistical advantageous entries when you do any kind of buying and selling of any stock. So, and a big part of that comes with patience. So if I am not having a really good entries, I need to make sure that I'm not being a part of it or just taking back. But the key point is don't do any stock entries if you don't have a statistical advantage doing it. Second thing is when I do an entry, I want the minimal spread. I don't want a 30-cent spread when I enter, just in case. Let's just say I buy 200 shares, I'm $60 down right away. So the smaller, the minimal the spread, the better it is for you to buy and get in, especially if you're scalping, because there's a lot of quick action in there and you don't really want those big spreads. Stock price must be above $1, and the main reason about that is just stocks below $1, I don't know how to trade them. They move all funky and it's just not for me. So I'm just going to leave that. Second, or the next one is 1 million minimum shares traded. So it needs to be 1 million shares traded within that stock for me to enter it. And a lot of that has to do to liquidity, because if it doesn't have that much liquidity, I won't be able to get out. And it just really helps with the positioning sizing, which is a good segue to the second part. So when it comes to positioning, and is a mid to large cap stock, I can use 100% of my buying power because they're huge. There's so much volume. I don't have anywhere close to the buying power for me to affect it or do anything with it. So I can use all my buying power and feel secure that if shit hits the fan, I can get out right away. The good thing about them is they don't really get halted, so I don't need to worry about some crazy news coming out and just completely fucking it over. But again, they do get halted. It's just very, very, very rare. Second is if I'm going to enter a low float stock, I can only use 25% of my buying power because low float stocks just tend to be very volatile, and it needs to be where the volume must be 500% or greater than the average volume. And the main reason for that is I need to know that people are interested in it. I need to know that this is the main play of the day. And there's no better way to know that when I see the average volume is 500% greater, because a lot of these stocks have been dead for like 2 months and some random catalyst comes and it just brings it up out of nowhere. So that's going to be a huge part. Consolidation entries. If you guys are not too aware of what consolidation entries is, let's just say a stock has been trading for 1 hour between a very tight range of like the top resistance being $54.50 and the bottom part being just $54. So it's just been trading between that 50-cent spread the whole time, and it hasn't really broken the top or broken the bottom. So if you want to enter a stock that's doing that because you think it's going to go higher or you think it's going to go lower, go in with 50% of your buying power, because I have no idea. It's not that I have no idea, but it just is not statistically advantage for myself to enter with full buying power and watch it just go up and down, up and down, up and down to eventually do something that is pretty statistically hard to determine. The next part is in the event of 3 consecutive losses and assuming they're micro losses. So by micro losses, I mean, let's just say my max loss is $200 and I have 3 consecutive losses of $30. So that's $90 of losing and $110 still left within my max loss. So when I enter the 4th trade, and I'm going to make sure that I use 75% of my buying power, not 100%. And the reason why is because obviously something is happening for me to lose 3 in a row. So when I enter the 4th one, I just want to be a little bit safe and reduce my size. If I lose on the 4th one, on the 5th one, I'm going to be 50% of my buying power. On the 6th one, I'm going to be 25% of my buying power. And if I lose 7 trades consecutively, I'm going to declare that as a no-touch stock or just not trade anymore that day, because there's something fundamentally going on that is causing me to have 7 losing trades back to back. And yeah, so that's pretty much it with the positioning. It just really lays it out for you. I want to add one more thing. So when I say 75% of buying power and the consecutive losses, it will be very determined on what it is. So let's just say I'm trading a low float. That means it's going to be 75% of my 25% of my buying power. And if I'm trading a large cap, it's going to be 75% of my 100% of my buying power kind of thing. So just to kind of make more sense to you guys. I hope that didn't confuse you guys more. All right, let's go check the next part of this. So journaling is stuff that I've been talking to you guys about. This is and I'm excited to really break it down in more detail. So first, let's go over the daily journal. So this is the daily journal, and this is kind of how it's going to be structured. And here I have all the stocks that I traded, and was it profitable, yes or no. Then I would put in the amount that I made on them. So if I trade NVIDIA and I made $50, I said, yeah, it was profitable, I made $50 kind of thing. It just kind of keeps it there. This part I'm not too big, on it, because I can always just kind of like copy my trade history and save that somewhere. But it is sometimes nice just to kind of look at it. So if I do review it in the past, like let's just say 6 months from now, I'm looking at today's trade, I can be like, okay, like it's right there. I don't have to go find another page where I copy and pasted that picture of my trade history. It's just right there. This is the main part of my daily journal, and this is just like a quick checklist that I have of what I did that day to make sure that everything's going well. So did I wake up 1 hour prior to the market open? Yes. Did I do a pre-market analysis? Yes. Did I do a watch list? Yes. Was max loss triggered? Yes or no? No. Was it a red day? No. Mental conditions? So I'm going to get to this, but it's pretty neat. This is like a rating system that I've created that kind of lets you know how you're mentally doing, and kind of in an honest way. But I'll get to that. traded over $50 commission, yes or no. So this is because I'm really trying to minimize my commission. So I'm just trying to be more conscious that I'm trying to see like, hey, did you spend more money or not? And I feel like by having that there, it's going to make me a lot more conscious of it. 3 consecutive losses. So did I have 3 consecutive losses? Yes or no? And this is again to make sure that I'm not doing the same bad habit where I let 3 bad trades happen in a row kind of thing. Post 9 a.m. trades profitable. So this is a new one that I added, and that's because at 9 a.m. I want to close my trades. But if I do make a trade past 9 a.m., was it profitable? Did I make money? And I want to keep track of that. The max green day, sorry, the max green trade and the max red day, and the whole point of this is I want to make sure that my max green is greater than my max red. Did I meditate? Yes or no? Was I overall satisfied with the trade? Yes or no? Then the total P&L. Then this is where the bulk of the meat comes, where I really express my emotions and write down the stuff that I need to do just to really journalize that day. So the next part is that red day journal, and I'm going to show you guys what that is. So the red day journal is pretty much the same thing as the daily journal, but I wanted to give it its own special thing because I wanted to make it more apparent that it is a bigger loss. It is something that happened, a shift in the fundamental in my trading that caused it, and I need to point or address it with more attention. So I'll do a big red day report if I lose 10% of my portfolio or greater. So that's when that gets activated. And pretty much I put in the date, the percentage loss, total loss and dollar value. Then I just comment here. So I will still do a daily journal if this day happens, but this one is just really expressed, and I'm talking a lot more, where the other one could be just 4 or 3 sentences. This could be like 2 paragraphs. Maybe I could say like, oh, like my family dog passed away and that really affected me, or something. Just like really pour my soul, just vomit my emotions into it. And this is the other part where I compare the similar and the different stuff I did to the previous red day. So just to make sure that I'm not falling in the same pothole every single time. And I just have a bunch of them like this, and that's so I can kind of compare them. So I feel like this is going to be really good to my journaling as well. So let's go check out the next part of our risk management, which is the trade analysis. So for the daily trade recap, I'm lucky because I'm doing this YouTube channel. I do them pretty, I do them pretty daily, and keeps me accountable for that. And by me doing that, it forces me to really kind of look at what I'm trading and what I'm looking at. So I'm really good with that, and I'm just going to stick with how I've been doing that. Now, the weekly and the monthly review is where stuff are going to be a little bit different. So I do still do the weekly review, and I really like that one because it's just a bigger, broader look at it, and it just points out a lot of different things that I usually miss when I am doing my just my daily review. So with my weekly review, I'm doing my total P&L, commission paid. Again, I'm really focused on the commission. My win to loss ratio. So am I losing lots or winning lots? Or I could be losing lots but still making good money because I'm cutting my losses pretty quickly. And is that the right thing to do right now? Maybe that's what the market favors or something. Let's just say it's a very choppy market and I need to be very scalpy, or is a very momentum market and I just got to get in and hold kind of thing. So that's kind of also going to tell me a lot of stuff of what's going on with the market. Strength and weakness is something I really love. I've been doing this for a few weeks now, and it just talks about things I did well and things I didn't do well, and it's really beneficial and I like it. So the second part is the monthly prep. This one is just a little bit bigger version of the weekly review, but it has a different little component to it. So first, I'm going to set up the profit goal that I want to have for that month. So it could be, $1,000, $500, whatever you want to call it. That's going to be my, profit goal. Second is market events. So if there's some big news event, you know, that's going to be scheduled to be released throughout that month or at some point in that month. I want to know ahead of time so it doesn't really come out of nowhere and like blindside me. And third is also holidays, just kind of right before or when I'm doing my monthly prep, write down all the holidays for that month and all the early finish for that month, because I've been blindsided a lot more by those early market close than the holidays, because I'm in a trade, then out of nowhere the market is closed. I'm just like, holy crap, like this is crazy. But it's just going to be really, really good for myself, and it's going to prepare me a lot more in the future. So that's how the weekly and the monthly review is going to be structured. So with that being said, let's go to the final part of this day trading triangle, which is the health. So your health is very important, and the older I get, the more I kind of notice that. But yeah, health is just numero uno, guys and gals. So first part of the health is the physical and social aspect. Second is the mental awareness and conditioning, and third is meditating. And I want to break into all of these categories and just really explain them. So the first one, like I said, is physical and social. So I want to go to the gym 3 to 5 days a week. That's what I wanted to say here. But 3 to 5 days a week of physical exercise. So go to the gym. I have a membership to martial arts, so jiu-jitsu, boxing, all of those sparring, and really kind of dive into it. And the whole kickboxing, jiu-jitsu is something that I've been doing very recently, and I absolutely love it. It's crazy, and so it's also very exciting. It motivates me to go out there and be active. And when you have an active body, you have a very healthy mind in a sense. Or if you have a healthy body, you can combat any mental issue that may come across, right? So it's really, really good. Healthy food. Man, I struggle with this one hard. I've gotten a lot better in the past 2 years, maybe a year, but it's just really hard to eat healthy when there's just so many options out there. It's super easy with all these different apps that you can get, and just the food smells so good. Like, I can't go past the food court at the mall and be like, yeah, you know, I'm gonna get that, or I'm gonna get this. It's just so hard. It's amazing. But I'm gonna try to implement healthy food into my diet. Luckily, my girlfriend is a health coach. She's a very, very successful health coach, and I've been vicariously watching and living through her on how healthy she eats, but also she measures her food, and like she's got the scale and everything, and it's shown a lot of results. You know, with her skin looks good, her hair looks good. She just got more beautiful, which is awesome, you know, and I want some of that shit. So I'm going to be hopping on that and try to get some of this healthy food, which is going to complement my physical health. Third is expand my social parameter. I am by nature a very social human being. I need to be around people, or else I just need to be around people. That's it. And last year when I started this channel, I just dove into it so hard. I didn't really socialize as much. Big reason of that was also COVID. So that really just affected my brain, and just kind of, it does things to you, especially if you're a social person. So I'm really going to try to be as social as I can, because one part that really kind of frightened me when I was day trading last year and I was really invested in it is just, I was like, is this going to be my life kind of thing? Am I really going to sacrifice my social life to pursue this career or something? And I don't want that, because I'm day trading so I can live my life, not living my life to day trade. So that's also going to include the day trading community within Discord. I have you guys on YouTube, which has been so supportive, and I've had the pleasure to get to know you guys more, and I cannot wait to get to know you guys on a much, much more deeper level. So that's really going to help me out with my social aspect here. All right, so let's go to the next part. So this is by far something that I've used currently right now that is really helping me overcome a struggle that I'm having right now. So I am kind of going through like a crisis in my life. I don't know how to say this, but I'm mentally stressed out with a few things that's happening. And I've been a pretty happy-go-lucky person the majority of my life, and this is the first thing that is very, I don't want to say super serious, but like it's living rent-free in my head, and it's clearly affecting my day trading. And pretty much just to give you guys a quick story is I'm having a problem with my work with the day trading. I have this supervisor that's extremely he's just not a good person, to be honest. Like, he's just not supportive, and he's goes out of his way just to get in my way. And last year I was like, that's it, I'm sick of it. So I brought in the union, I brought in like upper management, a bunch of other different agency, and we sat him down, we talked, and the best I got from him was just like, yeah, maybe I overreacted, maybe I shouldn't say those things. Then the upper management and the union and stuff like that, they were like, hey, we just got to give it time now, and we're going to see how he reacts. But what followed after that and his reaction to me just showed no change or no future promises. And it sucks because now I have to think about, maybe do I go back there, like have another year of just mental abuse? And it's only him. 99% of the people there are lovely, they're awesome, but it's just one individual. So I'm in that position where I'm like, the union really can't do too much, and they generally do want to do something about it. Like, upper management is super supportive, union super supportive, but it's hard for them to make a move because it's still a union, right? But I'm trying to think, I'm like, okay, do I have 1 year of mental stamina to handle it? So that's what's kind of going on with my head right now. And when I have red days, even like $20 days, I'm just like, oh my god, like I need to save all my capital just in case if something happens, or just in case if I don't go back to work, which I do want to go back to work 1 more year because I do love that job. But if I don't go back, I need to make sure I have all the assets that I have, So that's what's happening with my head. And so I spent a lot of time within this aspect of this day trading triangle to really kind of help me out of it and kind of prosper, and hopefully just set the right path for me to succeed in the future. So let's go check each one out. So the first one is called the MC rating, mental condition rating. I stole this from a stress management course I took while I was firefighting that really just honestly allows you to rate how you're doing with your stress. So this is my mental conditioning. So MC1 being, I'm able to execute trades in accordance with risk management while maintaining full ability to control emotion. So this is like where you want to be at. Like, I'm light on my feet, I'm moving around, I have a good understanding of the market and my risk management, and I'm generally excited to show up to the market on a daily basis. Now, MC3 is struggling to follow risk management and control emotions. So it's not a bad situation, but it's not a good situation. I don't want to stay in this situation for too long. This is kind of like, right, like you just gotta bring yourself up and kind of take it to the MC2, then MC1 rating. And MC5 being complete inability to control your emotion and displaying destructive behaviors. And I've seen this happen a lot. I'm doing a dip buy and I get a lot of just like, fail, and I just have like 6 losses. Then for some reason now I'm entering position with like massive sizes at a time. So now when I'm failing, I'm losing a lot more. Then I just double down and double down and double down until you see a crazy red number and you're like, okay, I'm gonna stop now because that sucks. Which is crazy. Like, I don't know why I need to see $2,000, $1,000 loss to be like, oh, you should probably stop. I should have stopped a long time ago, but that's because I have complete inability to control my emotion and I'm displaying this destructive behavior. And this is one of the things that I was talking about when I'm doing that journal, so I can be like, I'm at MC2 today, I'm at MC1, I'm at MC4 today, so that just keeps me honest to myself and also just pointing a light at the problem so I can address it. So I think this is really cool. If you guys like it, please screenshot it, and you guys can always add stuff to it and just kind of retouch it the way you feel. Alright, so the second one is positive CBT. CBT stands for Cognitive Behavioral Therapy. I remember when I was younger in uni, I took some psychology courses because they're super fucking easy and they're super fun. So I learned about cognitive behavioral therapy, and I was just like, this is really cool, and I really enjoyed it a lot. And pretty much this is the process of introducing positive thoughts to ensure that I condition my mind to succeed. I have been conditioning myself with really negative thoughts. So it's just like it's really conditioned that way. It's like how a river carves a mountain over years and years. I've done that with just this having these negative thoughts. So now when I have like a red day or something, I'm just like, holy crap, you lost money. You need to save all your money. What if you don't go back to firefighting? What if you don't make it as a day trader? So all these like thoughts are actually like when one negative thought happens, the rest is already pre-made and it's just a dominoes effect and everything just comes down. So, but knowing that, I know that I can reverse it by conditioning it with the positive thoughts. And that's what I'm trying to do here. And that's what's really going to help out with my CBT. And I think this is going to be a huge, huge part for me currently right now because I am suffering with my emotions. So emotion analysis, this is the first part of the positive CBT, and this is just laying out all your emotions. That's all you're doing. You're laying it out on the carpet, on the field, wherever you can lay it out, you're laying it out. And the whole point is just you dissecting it and breaking it down, being like, this is the list of stuff stressing me out right now. Okay, can I do something about it? Do I have the right resource to do something about it? And how can I do it within what timeline? And if I don't have the right resource, how can I get the right resource to do it? And I get it, there's some stuff in life that is completely out of our hands. You know, like you might be dealing with a situation that you can't really control, or, you know, God forbid, it's like a health complication. It's nothing you can do about it. It could be you, your loved ones, but in the end, it's stressing you out. So this is just a really good way to really break it down, dissect it, and reduce your stress and be like, this is affecting me and there's nothing I can do about it, or there's something I can do about it, and this is what I'm going to do about it. Even though let's just say you can't do something about it, you can still find healthy ways to just kind of reduce it, and it's not conditioning negative thoughts in your brain. And in fact, it's doing positive thoughts and making your brain stronger. The next part of our positive CBT is what I like to call a proactive seed. So this is just pretty much setting little seeds there and there. So when you need them, they blossom and they help you out succeed. So it could be as like looking at a max loss in a different way. So let's say your max loss is $300 US. Now take some time to be like, how much is $300 for me? How much do I have to work in my traditional occupation to be like, to make that money, you know? So like, and if I did lose that in like 3 minutes, why do I want to come back at it and double down and get more into the market and with a heavier position that's going to lose me another $300? So it's just you giving it the dollar value and connecting it to how hard you would work in a traditional job is a really good way to be like, okay, when I'm in that situation next time, this idea is most likely to come and pop in my head instead of the idea of like, holy shit, dude, you lost $200. You gotta double down, you gotta make more money. This way, the good positive thought is most likely gonna come into your idea. So it's like a proactive kind of seed like that comes in. And this could be done with a lot of things, with like breaking down how important small gains are over time. It can be like, this is what gets me going, and this is gonna be very helpful in the future. But then you come across the road where you're like, but I want to make more money, you know, like I feel like I need to make more money, and you get off from that parameter, then you lose. So now you can be like, okay, like remember last time you didn't follow the process of just you trying to make incremental gains because you wanted to make more money, and that has cost you to lose more money in the long run. So now when I have those kind of emotions, I can quickly nip it in the bud, because my first reaction or my first mental thought is going to be like, hey dude, you're doing great, just stay on the same path that you're taking right now. Third is mind resiliency. I think this is really, really important. This is something that I actually don't really do, but it's something I'm really implementing, and I think it's going to be really helpful. And this is as simple as just like waking up in the morning, and like I have been doing it, but it's only been 1 week, so like I'm not gonna pretend like I'm an expert, but all it is just right in the morning, you write down 3 things you're grateful for. 3 things that make you happy. You know, write down, say, I am strong, I am smart, I am capable, and I am growing as a person. Because this is just working your brain out. It's like you being in the gym and you're just exercising, but for your brain, you know? And this is just a really, really positive thing, because when we do fail, and which we will when it comes to day trading, because that's just the way it goes. It's not your traditional occupation for a reason. And when you have a failing day, your brain is going to be like, oh man, you failed, you're not capable of this, you're not going to do it. Then you're going to have a really bad moment and situation. It's easier for you to kind of go into the dark side of your brain. But if your brain has been trained in the way of the good, the way of the light side, the good side here, you're most likely going to be like, no, fuck that shit, I'm awesome, and I know I'm awesome because I love myself, I'm strong, I'm great, and I'm capable. And it's just a really good way to combat that, because if you have a negative experience, it's so much more easier to go downhill. You don't want to wake up in the morning, you don't want to do the research because you're afraid or something, so this just makes you stronger as a person, and it's a really, really big part. Alright, so let's go to the next part, which is the vision quest. Vision quest is understanding your why. Why do you want to be a day trader? Understanding my why when it comes to trading, what I plan to achieve, and what trading will offer me. So, short-term plan, like, am I going to subsidize some of my bills? Am I going to subsidize some of my income? What am I planning to do with it? Long-term, I want to become a full-time day trader and make money that way, then save money, buy some properties, have a real estate empire, maybe open up some sort of finance firm. Like, it could be anything, but I think establishing the short and the long-term plan just really grounds you, and it's going to be very, very beneficial. And it's easy to have that idea because you can be like, oh, obviously I'm gonna make it as a day trader, then I'm gonna buy all this cool stuff for my loved ones, then I'm gonna buy property, then I'm gonna go travel. Yeah, you have that in your head, but it's a whole different animal when you write it down. And I think it's very, very useful to do that. So I really recommend you guys do that as well. Third is breaking down my biggest struggle with trading, obstacles, fears, resources. So on the other, just a slide before this, we were talking about emotional analysis, and that's what I was talking about. But the reason why I put this here again is this is only specific to day trading. Write down your biggest fear when it comes to day trading, your biggest obstacle when it comes to day trading, and lack of resource when it comes to day trading, so you can understand what's kind of holding you back when it comes to day trading. And it just really brings you to just kind of zeroes in of what you need, but also write down what is your love for day trading. Why do you love it? What is it going to offer you? For me, I really, really like the aspect of being a digital nomad. If you guys don't know what a digital nomad is someone that can travel the world and make money anywhere in the world because they have access to the internet. And that's what day trading is. But day trading is just on a much higher scale for digital nomad, because let's just say I'm working for a tech company, I'm a digital nomad. There's still a certain parameters that I got to follow to be a digital nomad. Maybe there's a certain time zones I have to live. I can't live in a different time zone, and I get that. It's probably going to be the same with day trading, technically, in a weird way, but in the end, I can say, no, fuck it. If I have to wake up at 4 o'clock in the morning, or the market opens up at 9 p.m., I'll do it if I like the place. It gives you a lot more power when you're a day trader, because you are the boss. You dictate your own future and your own success, and that's pretty fucking cool. I really like that. So let's go to the next part. So this is the final part of the health, which is meditating. Again, I'm really, really new to meditating. I'm really trying my best, and best explanation or the best struggle that you will face when you first start day trading, or whatever you're gonna find it difficult, it's like working out when you first learn how to go to the gym and you don't know what you're doing. You're expecting fast results. You're just like, yo, dude, I just did arms, man. Like, why aren't my arms massive right now? But it takes time. It absolutely takes time because A, you've been doing it wrong the whole time. You've been like, are you working a certain muscle group? How are you working it? Are you challenging yourself? Are you eating the right diet? You know, then you can't expect the results that fast. So that's kind of what I'm at with meditating because I'm just so new to it. I don't know what's going on. I struggle with just like trying to figure out what I need to do with it. So I'm trying to do it 2 times a day, and I feel like that's going to be very, very beneficial. The last part of that is I think meditating is really going to improve the CPT aspect of it, and it's kind of like demo trading for your mind in a sense where you say, I'm going to do my strategy of doing an overextended long trade, and I'm going to trade NVIDIA. But let's just say, something doesn't go what you planned on your trade. You can meditate before that and be like, okay, if NVIDIA doesn't go the way I want it to go and it triggers my max loss, this is what I'm going to do. I'm going to end the day, I'm going to do something else, stuff like that. But the whole point is you are preparing yourself for that situation if it comes. So when it does come, or let's say the situation came, you're well prepared. You've already had step A to all the way to step Z of how you're going to handle that and prepare for that. So it's really, really good to have that meditation session right before you trade. Alright, so it looks like this is the final part of that day trading triangle. I know this is a lot longer video, but I believe this is going to be really, really beneficial for myself. And if you guys get anything from this, please use it, share it. If you want to add anything, please let me know, because I think there's a lot of stuff that we can work here, and it's really exciting. And a lot of the main reason for this is just this month has been pretty rough, and instead of just taking the back seat and licking my wound, I just decided to really fight back and be like, hey, I'm gonna do this. I'm gonna succeed. In fact, I'm gonna succeed far beyond my imagination and be an amazing day trader. And this is the first step to create a solid foundation, and this is one of many steps that I'm going to do to become a profitable day trader. So if you guys really enjoyed this video, please give it a like, subscribe, please comment. I love hearing and seeing your guys' comments, or seeing you guys comment, I guess. But it's just really nice to interact with other day traders and see how they're doing and what their struggle is, because in the end, we're trying to build a very good community here to help each other out and just lay the good foundation that we need for us to succeed. Yeah, that's a lot of stuff here today, guys. A lot of talking, a lot of good materials. So on that note, I'm going to end this video, and I'll see you guys on the next one.